China is dealing with a debt of more than $9 trillion. Local governments are scrambling to pay off their loans. China is facing an economic crisis that could cause issues not just for them, but also for the entire world. If the people in charge in Beijing don't find a solution, everybody could be in serious trouble. Today, we're going to talk about the crisis in China as local governments have defaulted on loans. There have been many changes in policy to help the situation, but it's only getting worse. Let's start with China's biggest problem. The issue is with local government financing groups, or LGFVs, which have helped the economy by funding things like roads and trains. Over the past 5 years, the money they owe has almost doubled and reached more than $9 trillion. Even though none of them have failed to pay back their bonds that they sold to the public, they're still in trouble. This is because the projects they funded didn't make enough money to pay back the loans they took. For example, one of these LGFVs in Kunming City made investors nervous when it couldn't pay them back. In the Guizhou province, officials are asking for help because they have a lot of debt. Examples like these show that local governments are struggling after years of dealing with the pandemic. This is a concern because a lot of Chinese provincial governments are unable to find money. Some cities are trying unusual ways to get money, like Wuhan, which named and shamed people who owed money. But the Chinese authorities are cooking up a few strategies. They're thinking about giving more time to repay the money, and if things get really bad, they might even use the money from the central budget. Tapping into this budget isn't something Beijing does every day. But the local governments are like the foundation of China's economy. After focusing on building things like roads and trains for a long time, they aren't getting as much money from selling land as before. Add the heavy costs of dealing with COVID, and you've got a recipe for disaster that could be very bad for China's economy. The Communist Party leaders talked about strict control back in April when it came to local debts, but this time it's different. Experts see this shift in tone as a positive step. Beijing has realized that they need to do more than stand on the sidelines and get in the game. Beijing's not stepping in earlier only made things worse. The local government debt reached $12.8 trillion in 2022, which is close to 76% of the money made by the economy. Thankfully, Beijing has at least mentioned hidden debt risks multiple times. They think the numbers might be even bigger if you count any debt that's not on the city's official records. This is a situation that can't keep going because it's not sustainable. It's an obvious problem for Beijing, and they only have two choices. Either they don't help, or the way they run the economy falls apart, which will hurt how much the country grows and how stable things are for people. Or they can help, like they're now willing to do, but that might encourage cities to spend money, which is risky. Some advisors have said that they need to decide because the central government won't take all the debt, and they're worried this could make people act carelessly with money. To avoid that risk, advisors suggest that everyone involved should share the problem, from the banks, local governments, the central government in Beijing, and the whole society. Experts believe that the government in Beijing could tell the banks it owns to let people take more time to pay back the money they borrowed. They might also give longer loans with lower interest rates, which they call extend and pretend. But the banks need to be careful and picky about which loans to extend. Changing the terms of loans can harm the bank's own financial situation, and this makes it harder for them to provide money for other parts of the economy. Local governments have a role to play too. They need to be open about their financial situation. Local governments could use the extra allowance they got last year to create bonds. They would then trade the bonds for their debts and turn them into official debts that are on record. And this could be as much as 2.6 trillion yuan. China's central government could also decide to sell off assets. Or they could use them to get loans because this way they can get more money. Some experts suggest that the central government could also issue bonds at lower costs. This could also replace local debts. In fact, the government's bonds have lower interest rates than most cities and groups supported by the government have to pay. But to make a real difference, experts think that these changes should be worth more than 1 trillion yuan this year. To really fix the problem of local government debt, there should be big changes in how the economy works. Some experts even suggest that they should change how they measure the success of local government offices. But all these changes might mean that China's economy will grow at an even slower rate than before. This is a big decision for the leaders in Beijing and for the entire world, for that matter. This default could affect everyone. Brock Silvers from Kaiyuan Capital said that if the debt isn't paid, Chinese investors are the ones who will feel the impact the most. But this could also have big effects, like causing a longer and deeper economic problem for China. This, in turn, might affect the world's economy. The most recent changes are making things even harder for local governments in China. The value of properties across the country dropped, so they got less money from selling land. But they needed to spend more money because of the pandemic. Research on those who invested in China discovered another major issue. They found out that there were huge amounts that local governments were borrowing. It's worrying because the borrowed money might have gone into projects that couldn't make enough money to pay back the loans. And this leaves many depending on getting new loans or money from the government to keep going. Especially the poorer areas with higher costs. Many of the LGFVs faced a big problem when the People's Bank of China gave new instructions recently. This made it almost impossible for them to use the bond market in the free trade zone. This is a big issue because these groups used to be the ones who used that market the most. The new instructions show that the leaders in Beijing want to control and watch how much money is borrowed. They don't want any financial methods that don't follow their rules. As expected, this situation has made it harder for people in poorer provinces to get money when they need it. This is happening when investors are being more careful about taking risks with their money. These groups now need to give back more money when they borrow, and they also have less time to do it. This is making the people who make the rules feel more pressure to find a solution to this issue. Advisors say that we shouldn't forget about LGFVs. They are connected to what the government has promised. So the real problems start when people start to doubt these promises. It could cause problems with the government's credibility to handle this situation. LGFVs are China's biggest problem right now. LGFVs have always been the bridge between local government earnings and spending. So, of course, they won't generate much profit and will be unable to repay the money. In fact, analysts had already predicted that most of them would collapse and get financial support from banks secretly. This is exactly what's happened, and all that's done is make things hard for rural banks. Even bondholders are in danger of not getting their money back. The debt of China's LGFVs has surged to approximately $9.5 trillion. That's equal to half of the country's entire economy. The concerns about LGFVs struggling to pay back the money they borrowed have a link to China's efforts to fix their economy. This comes after a problem with too much debt from properties a few years ago. This crisis led to some property developers being unable to repay their debts, resulting in a drop in revenue from land sales. To counter this, the government introduced various measures to provide support. According to Wang Tao, the chief China economist at UBS, LGFVs are currently facing even more pressure to repay their debts this year. Premier Ling Keqiang has already said that it's important for China to deal with the problems caused by local government debt in the next year. He shared this during a government report while China's annual meetings began. The Chinese government is paying more attention to dealing with debt now. This is thanks to the banks getting asked by LGFVs to allow them more time to pay back the money they borrowed and to lower the interest they need to pay. China's last resort might help. For the past few years, Chinese banks and other financial groups have been careful about giving new loans to LGFVs. Even some institutions that handle money have been checking their collections of investments. They've come to realize that the LGFVs don't have the means to pay back their debts. But since getting more loans is their only way out, LGFVs are in a tough spot because it's become practically impossible to get loans in China. This has forced them to borrow money from other countries by selling their bonds, which isn't the smartest move if they want to benefit China's economy. Last year, they raised around $39.5 billion this way, and when you have debt overseas and has a much higher interest rate than in China. But starting at the end of 2022, the government has been paying more attention when LGFVs want to sell bonds in other countries. They have been saying no to many of the requests from LGFVs that don't have a good credit rating. This is part of their plan to make sure that things don't get any worse than they already are. Although the debt is lower than $12 trillion this year, there's still a lot of money that's owed. Do you think China could get out of this debt nightmare? Let us know in the comments below. Thanks for watching, and we'll see you again soon. And make sure to watch the next video.